watching Lookup TV.
You're watching The Big Idea with me, Rachel Anyango. Tonight, we are discussing the implementation of digital service tax, which still has a lot of gray areas. Not so many people are quite familiar with it, and that is our topic for tonight. I'm joined here with Nixon Omondi. He's the team lead digital economy at KRA. I'm also joined with Miriam Mugo. She's an advocate of the High Court and a content creator. I'm also joined by Rebecca Ndungu. She's also an advocate of the High Court and a content creator. Welcome.
Thank you.
Yes, and I think for me, the first question will go to the ladies who are also content creators. Do you feel that DST is a fair tax? Maybe you can start with Miriam.
Well, I think depending on who you're targeting, DST would be a fair tax. So if they are targeting the big corporations, the people who are raking off a lot of income from a country and taking it elsewhere, then I think in that case DST is fair, especially in the times we're living in. But if you're targeting myself, for instance, like I think our channel has less than 500 subscribers, we're not yet monetized, or even someone recently monetized. I think if you're targeting to the drop down to the gutter, I think in that sense, I don't think it's fair.
It's not?
Yeah.
Okay. And how about you, Rebecca?
Speaking as a content creator,
Yes.
I do not think DST is fair, as Miriam has said.
Yeah.
If they're targeting the big corporations,
Yes.
it's okay, like we've seen in other countries, that's what they've done. But if you're going to the small content creators who are just making small amounts of money, it's not fair at all. So I don't think it's fair.
Okay.
Yes.
Nixon, is DST targeting global corporations, the big corporations, or is it targeting influencers and, you know, the small digital entrepreneurs?
You know, when you make laws and you know, just pinpoint to specifics, you never get the real intention of the law.
Yeah.
In fact, in most jurisdictions I've seen, the law is made for a specific entity. By the time the law is applied, that entity is not even within that law. So that is why we need to make the law that can stand the test of time. I know one of our very famous judges in the olden days says that taxes are never fair. However much we are trying to ensure that they are fair to everyone.
Yeah.
But you know, our constitution itself, it says that everybody should pay their fair share of tax. That is one. And when you look at DST, we are basically not targeting a specific group. We are targeting a whole economy. That's why we call it the digital economy. So yes, DST is targeted towards a specific economy, but not specific people. And that's why anybody who earns through a digital means will be liable to digital service tax. When you look at what they call the big techs and the small influencers, they are all learning from the same platform, basically. And why DST is because sometimes laws are made, one, to enhance compliance in the sector. So DST might be coming in for the small ones to enhance compliance, because we've noted from our side that they are not paying. And then two, the laws are also made to expand the tax base, to ensure that those who are not within the tax net are then brought in. So I will still say to my colleagues, of course they are learned than myself, Miriam and Rachel, we are not targeting anyone, but we are targeting an economy. Thank you.
Okay. Now let's just go back to the what DST means. Let's start with that. Let's define it. What does digital service tax even mean?
Okay, I want to put it very simple.
Yes.
That as the name suggests, it is a tax on services offered online or digitally. You know, we had a digital government.
Yes.
So if you're offering services in a digital manner, then your income is subject to tax. That excludes goods. Okay? So we are looking at services which can only be done through an online means or electronic means, or those who provide what we call intermediation platforms or online marketplaces that connect buyers and sellers. So broadly we are saying if you have a digital service, a service that can only be done through electronic means, you will be liable to digital service tax. Or if you offer a platform, a digital platform that connects various buyers and sellers, then you're also supposed to pay the digital service tax. I don't know if that is simple enough.
Okay, so no, well, if you're selling goods online, you're not liable to pay DST.
If you're the owner of the goods, you are not going to pay digital service tax because it's only chargeable on a service,
Okay.
not on a good. But you know, currently, when you want to sell your very nice shoes,
Yes.
or you have many pairs and you decide to dispense off with a few, and you put them on Jumia, for example,
Yes.
an online platform. To Jumia, they are providing you a service, which is a digital service. But you are providing tangible goods
Okay.
would be or to the customers. So you will not pay digital service tax. It is the platform that will pay the digital service tax.
Ah.
Yes.
But now, if the platform is the one that is paying the DST, does
Yes.
that... I feel like that means the cost will now come back to me, the buyer, or...
Custom.
Yeah.
Yes. Actually, that is a real question.
Yeah.
Allow me to approach it this way.
Yes.
If you look at digital service tax and income tax in general, that should be a tax on profits. It's not like VAT or excise, which is an add-on tax, which you push to the next level in the distribution chain. DST is a tax on profits. Why? When companies have paid DST, or entities or persons have paid DST, for residents, those who are within our jurisdiction, locals, what they'll do is they'll declare their income normally, declare how much profits they have made, levy 30% if they're corporate bodies, and before they pay tax, they'll be allowed to claim the digital service tax that they paid in advance. So do you think that should be pushed to the consumer? I don't think so. Because it's basically a profit tax paid in advance. For the non-residents, them that will be a final tax. But you know that will be dealt with according to their jurisdictions. But basically it is a tax on profits. But you know we have a free economy. Apart from the oil sector where prices are adjusted on the 14th, so on Valentine's Day, will we see an adjustment in the price of fuel? Yes. So people price depending on what factors control their business.
Okay.
So we might not have a say on how people price. Some price on sentiments without seriously economic underlying factors. But DST should not lead to an increase in price of
Is
the
that
services.
something you're guaranteeing? Because I feel like the way we know things they'll pass on that cost. If I have my bare minimum, I'll be like, okay, so if I increase my price say, to 110,
Yes.
after we tax, I'll retain the 100 that I intended to retain. So
Yes,
essentially
it
that
is.
would be passed on.
Basically, it is possible so that they push it to you.
Yes.
But even as they push it to you, as you make your profits, you also claim it back.
Who claims it back?
The business person, if you are the one selling your wares
No, we are
on their
speaking about the
platform,
consumer.
or the consumer,
Yes,
if they pass it to you, of
very
course, it will lead to an increase.
Yes.
But to me,
What's my
it
recourse in
shouldn't.
that case? Do I
Uh,
this
as
vicious
a
cycle?
as a consumer, you might not have a lot of leeway because that is the price you'll take up. It's either you consume or you don't consume.
Yes.
But basically, I think it would be unfair on the businesses to adjust their prices on a cost that they are going to claim back. Basically, it's an in and an out. Yes.
Now, okay, it's a good thing that you've asked that question,
yeah.
Miriam.
Yeah.
Because you see now, I feel like then that means that it's going to be more lucrative to operate offline
Yeah.
compared to operating online, I mean, for us consumers and also for those people who are also going to be affected,
True.
So I don't know, how do you feel about that?
Actually, well, yeah, a lot of people might want to shift offline, which is disadvantageous to the economy. We are trying to build a sustainable digital economy. I think
Yes.
that's what our government has been going by.
Yeah.
So you would find a lot of people will be hesitant, to publicly declare and show how well they are doing, and maybe want to trade offline. But and which is to the devil, no one wins in that case because you can't tap into wider audiences that you would reach using the digital space. So there's that risk. And which leads me to a question that I have for our learned friend.
Okay.
I know I'm not interviewing her, but allow me to ask, what would happen if I advertise my goods, or rather display my goods on a shop online on my personal Instagram page?
Okay.
I can't say that a sale was concluded as a result of me
Yes.
publicly displaying my good. If that person eventually comes to my shop in town, and we
Okay.
conclude that transaction there.
Okay, I
Is that
get you.
still a digital
Yeah,
transaction?
true. And let me start with the first question, or the first comment that you made. For those who like to go physical, I know the times might not allow for that. You know, we are in a generation, is it Generation X or Y? We need things to be done quickly.
Yes.
Nobody will still want to go back to the olden days. You go walk in the supermarket, show people how big your basket is, and you know, you want to do things, you go online, get to the website, pick whatever you want, get the Nduthi guy connected to the platform, and get your wares at your doorstep. But again, those whom I feel really wish that they go back to the brick and mortar are those who have not been paying. They feel this tax has actually caught up with them.
Yes.
So they still want to hide.
Yeah.
But I think the times will not allow them to hide. We also have quite a lot of information. And within no time, I'm sure the law will catch up with them.
KRA is just like Big Brother, always watching.
No. We watch when necessary, not always. As though. Then when you come to the Miriam's question, if Miriam is having some merchandise which she's selling, but she has a website, she displays the merchandise, Nixon will see them and say, I like this. Okay, so I go to the shop and obtain. You are not subject to digital service tax. Because basically it's like you are consuming your own digital service in order for you to sell your physical products. And we agreed at the beginning, for physical goods, digital service tax will not apply. Yes, but if you have a platform, for example, I know that is also happening. You have a platform, you place your good, people see it, see goods, other people, you know, place their goods on your platform. People see the goods and go to the shop to buy. If you don't get anything to that respect, there's nothing to declare. Yes, because we say the DST regulations provide that you pay based on a consideration. So if you've not received anything in return for the services you've offered, then there's no consideration and therefore there's no DST.
Okay, because the two of them are also content creators on
Yes,
YouTube. They
yes.
have a channel, Legal Banter 254.
Yeah.
Now, I need to understand something. Are they affected by the DST? Because there's the aspect of YouTube and monetization and making money from it.
Yes, actually they are digital service providers. If you look at the definition in the regulations.
Yes.
So if you offer services, you know, you can offer services through the social platforms, social media platforms in various ways. One, you can have a page which, you know, because of many people coming in, your content being watched online, YouTube now, you know, it makes you, feels you have enough, you know, enough premium to start earning. Then you're actually earning through a digital means, because you are monetizing your content digitally. So in that respect, you are supposed to declare what YouTube, for example, pays you with respect to DST. Then there are also cases where, of course, YouTube pays you because they know at the end of the day they'll use your page. So they'll use your page to advertise. And for them to advertise, for example, to Kenyan products to Kenyans, the Kenyan companies or entities will pay them to place ads on your page. So they're also earning through a digital means. They'll also be subject to DST. And then there are also cases where Rebecca here, because she has a very good page, Nixon would like to view her page every 5 seconds, an entity approaches her for purposes of endorsement or brand building, that please put up the Hanan tissue on your page or demonstrate something, you know, and then now that entity pays her. She's also earning through a digital means, so she'll also be liable to DST.
Oh,
Yes.
So that means Rebecca will pay DST.
Correct.
And
The
YouTube will also
platform,
pay.
yes.
Correct.
Now I'm getting it.
Thank you. Thank you. Thank you. That's why we have such platforms to make it simpler. You know, when you read the law, they are not my colleagues. I think they are my seniors in the law, because I'm planning to start law maybe in 10 years.
10 years.
They will tell you when you read the law, there's a lot of jargon, the language. It may not be very easy to understand. So in such forums, we try to simplify.
Okay.
Yes.
So it's actually a question of what money are you making an income? If there is an income coming
True.
in, then at that point
Very
you have
true.
to pay on that income.
Very
Okay.
true.
But I think it will be very hard to track how much money these people, because they don't issue invoices. How would you be able to track
exactly.
that?
So how will that
You,
happen?
you know, this is
Track me down.
like the digital economy. I think leaves the best footprint.
Yeah.
It's like how do you say it in the criminal law? Any crime leaves what? I think there's something like that. There's usually some trail. However much you might cover your tracks, there's a kind of evidence too you always leave.
But does that
Yeah, so,
not mean you carry will spend so much resources trying to follow trails that maybe
All the trails has, yeah.
that beats their point, the tax that they are trying to collect might be even lesser than the cost incurred to follow those trails.
Yeah.
Very true. You know, when we come up with the laws, we look at that principle
Yeah.
as put up by one of those economists we call Adam Smith, that a good tax system should be efficient and economical, use less to collect more.
Yeah.
And I think DST is one of the taxes that fall within those categories. One, we know that we are in a digital economy. People are paid either electronically or through bank accounts. And the law gives us, leeway to access bank accounts, of course, with certain steps taken. And therefore, I don't think it will be very difficult for KRA to know that Miriam or Rebecca here or Rachel earned through a digital means. And even if you are paid by entities, you know, an entity in Kenya can decide and pay you, whether in kind, they give you a vehicle, or they call you and tell you, pick this cash up. You know, they'll have to record it somewhere.
Yeah.
Yes, so we'll get to the trail of those, kind of transactions.
Okay, so let me ask Rebecca, for your channel, is it monetized, or how does the monetization aspect work?
We are not yet monetized. You have to have 1,000 subscribers and 4,000 watch hours, and we are at only at 450 subscribers. So we are still not yet making money.
Have a long way.
True.
Yeah.
Long way, yeah.
Okay, okay, great. Hopefully, maybe by the time we're done with this conversation,
Yeah, we'll be
you'll have
there.
gotten their
No,
thousands
she will.
Yes.
She will. We are here to join.
Oh,
and,
nice.
Give her the hours.
Okay, so I'd like Nixon to clarify something that I picked up from their website. DST is applicable to digital services, thus for goods sold on digital or social media platforms. The suppliers are required to declare their income earned under the self-assessment regime provided under the relevant tax laws. So
Okay.
how do you declare?
Oh, good. Just that statement, I think goods are not within, as I explained earlier. It is basically services. So if you are the provider of the service, the person who is earning income by provision of digital services, what you need to do, the iTax system is available.
Yes.
For residents, you already have a PIN, so you don't need to do any other registration. What we've provided for residents is an availability of a return, what we call a payment return. So you just go to iTax, go under payments, then it's a very simple return, the simplest ever. Just tell us how much did you receive for that month, and then the system automatically calculates the 1.5%. And then you generate a payment receipt number. You can pay it through 572, the whatever.
Pay bill, huh?
Yes, is a pay bill, or you go to your bank and remit the amount. For non-residents, because they don't have a PIN, they have to register. We have also provided what we call a simplified registration mechanism. They need to attach 2 documents: a certificate of incorporation in their country of residence,
Yes.
and a TIN. You know, in Kenya we call it PIN.
Okay.
Yes, personal identification number. But in those other countries, they call it a tax identification number. So they attach those 2 documents and a few fields they need to fill up. And then we issue them a PIN. then they pick the obligation for DST.
Okay.
And then they follow the same payment return like for residents.
Okay.
It's very simplified. There's no, for VAT and corporate tax, there's a separate return and a payment module.
Yeah.
But this one is joined into one. Yes, in the month you didn't sell anything or you didn't provide any digital service, you rest easy.
You
In
file
the
a nil return?
No, there's no nil return.
There's nothing.
No, there's nothing to file. Yes, that's why we say it is a simplified, because we want people to comply. We don't want to make people to labor to register, and file such returns.
Okay,
Yeah.
I'm being told I have 3 minutes before we go on our first break. You wanted to add something?
I wanted to ask him something.
Okay.
So, how about these small content creators? They make a one-off deal. It's not
Yes.
that their day-to-day job is to advertise on their platforms. It's just a one-off deal.
Even
They
if
also
it's a one-off deal, you need to declare in the month
Yes.
of that deal, because you are still earning.
Yeah.
It's only fair that all of us, yes?
Could it not wait for the annual declarations that we do for our
No,
income?
the good thing with the digital service tax, it is an advance tax. So you pay sort of your income tax in advance. When you finally file your return, you'll claim what you filed, what you paid. For example, if Miriam is employed and she also does a bit of, the one-offs, okay? The employer will remit pay as you earn monthly. She'll also need to do on the dates, on the month she has received the income, the digital service tax. When she files her annual return, she will declare employment income, add provision of digital services or business income, however erratic it was, and then together charge tax as appropriate, but claim what was paid as DST, and also the pay as you earn.
All right.
So that is what the law provides.
Okay.
Yes.
Then let's take a break. We come back with more of this conversation on digital service tax. Do not go anywhere. We'll be right back.
Thank you.
On the next episode of Kezia.
Ulikuwa unataka kuongezea pesa zaidi, si ndio?
Kwa nini?
What I really mean is, I want us to be good friends. A long-term thing.
Kezia yuko sawa. Amekaa kwa muda kwa simu.
Kezia, Wednesdays from 8 p.m. only on Lookup TV.
You're not a man, no. You're not a man, no. You're the God who opens doors no man can shut. You're not a man, no. You're not a man, no. You're the God of everything. There's no one like you.
Hello. You've heard of TB, but do you know what latent TB is? 1/4 of the people in the world have got it. Don't be alarmed. Latent TB means that the TB bacteria in your body are asleep. Because they don't make you feel unwell, you cannot know if you have it without a test. You can't pass latent TB on to other people. But don't get too comfortable. 1 in 10 people with latent TB will get ill later, when the bacteria wake up. This is called active TB, and there is no way of knowing who that will happen to. There is a solution though. You can get tested and treated for latent TB. The test and the treatment are free and simple, especially if you've come to the UK from a country with lots of TB. Visit the doctor for a simple free test. When you have latent TB bacteria asleep in your body, you won't feel unwell. If the TB bacteria wake up and become active, you would start to feel unwell. People with active TB will have symptoms. These can include coughing, fever, and sweating at night so much that you have to change the sheet. They also include sudden weight loss for reasons you can't explain, loss of appetite, and tiredness. But there is no way of telling if you have latent TB without a test. Even if you've had your BCG vaccine, you can still have it. Even if you've been screened for active TB, you can still have it. Chest x-rays cannot see latent TB. Even if you can't remember being around someone who had active TB, you could still have it. But that's okay. Testing for latent TB is very simple. Just a blood test or a skin test. It can be done by your GP. And it's completely free. If you're pregnant, you should still get tested. The test won't harm mothers or babies. The test results are confidential.
Out in the Wild, weekdays from 10 a.m. only on Lookup TV.
Welcome back to The Big Idea with me, Rachel Anyango. Tonight, we are demystifying what is digital service tax. We are talking about the implementation of the digital service tax and also just trying to make clarifications. We are joined with Nixon Omondi. He's the team lead digital economy at KRA. I'm also joined by Miriam Mugo. She's an advocate of the High Court and a content creator, as well as Rebecca Ndungu, who's also an advocate of the High Court and a content creator. Before we went for the break, I was already starting to get the gist of it, how DST operates, so I'm pretty excited. And now, I have a question for you, Nixon, from someone who is interested in the conversation. And this person wanted to know, how does DST and withholding tax relate? And then, can one pay both of them? So in what instance are you supposed to pay DST over withholding tax and withholding tax over DST?
Okay, thank you. Yeah, very good question. And the regulations provide that if an income has already been charged withholding tax, then DST will not apply. So for Rebecca, who want to do endorsements for entities, so if that entity deems that endorsement is an agency, and you know agency income or expenditure on the part of the entity is subject to withholding tax. So if they have already withheld 5%, Rebecca does not need to add that to the list of the income she's going to do 1.5%. So that is how the law is.
Yeah, actually, just clarify, how is the DST calculated? What's the rate?
DST is 1.5% of what you have earned, the gross transaction value. So if I'm doing a platform that connects buyers and sellers, basically I'm earning a commission. Okay, so that commission is what is chargeable to 1.5%. So if I made 10,000 for that in that month, and I'm declaring by 20th of the following month.
Yes.
For example, we expect 6 days after Valentine will be the final due date for DST for the income earned in January.
Yes.
So they'll pay 1.5% of 10,000. That should be 150 or one. Yes, it's actually 150. That is the amount that will be payable. Yes.
Not too much.
looks so. Okay. Yeah, that is why our rate is the lowest in the world.
Yeah.
Yes, it is the lowest in the world, globally.
So it's very important to note that the tax is remitted on the
20th.
day.
By. So at the end of the month, you have between 1st and 20th to remit.
Yeah.
Yes.
Okay. Then another question also, are Uber drivers, Bolt, Little Cab also affected by this? And in this case, who pays for the DST? Is it the driver or the Uber platform service?
Okay.
provider?
Now, when you look at the way taxi hailing business is done, the driver does not offer any digital service. Unless he's carrying your electronic signature, okay, for jokes only. The driver is actually not offering a digital service, but he has procured, the rider through a digital service,
Yes.
okay, or through a digital means. And whoever has provided the digital service to the driver is the one who is liable to DST. In fact, if you look at it keenly, it is the driver or the vehicle owner who pays the taxi hailing platform. Yes, so it is the platform that will pay the DST.
Okay.
Yes.
Aye.
So Uber drivers should not fear. They should, but they should also come forward and declare what they are earning.
Through the other mechanisms.
Okay, again, another question. Does DST apply to Airbnb hosts, or is that a different ballgame?
Even the hosts, if you look at it, it's not a digital service. For you to have used Airbnb services, you go to Airbnb, look for a good apartment in Syokimau, you lodge there. That is not digital. You have to physically be present. So the provider of the house or the apartment is not offering any digital service. It is Airbnb who is offering the digital service, the digital platform. So you expect Airbnb to pay the DST, not the owner. Unless the owner also has another platform and they are adding.
Unless they
or
own
is an
Airbnb.
influencer. or yes, they can also be the owners of Airbnb. Yes.
Okay. When we went on break, Rebecca asked you a very important question. How much are you targeting to get, and in what period?
I'm happy Rebecca asked that question.
Yes.
She's a very good citizen who is doing her civic duties. Want to know how much we are going to collect, and yes, of course, I hope she follows up how we are going to spend.
Okay.
The government is going to spend the same. The government is planning to collect about 3 billion, 3.4 billion for digital taxes. Where digital taxes is DST, as well as there's a VAT to be paid by foreigners only. That is why the tax is just known to foreigners more than the residents. Because the residents are already doing VAT, the normal VAT. Yes.
Okay, so in how long?
We are looking at the period to 30th of June 2021.
Wow.
Yes, and remember DST is taking effect, or took effect from 1st
of
so
January.
that's 6 months.
Yeah.
And then the VAT was given a transition period of 6 months from October. So we expect the taxpayers to pay, maybe Miriam, you're better at these dates than myself.
Yeah, by?
From October, 6 months. That will be October, November, then you have 4 months, April. So we expect them to start paying by May.
By
May 20th,
Okay. Then again, now since we are talking about all these jargons that are only familiar with mostly KRA, we have withholding tax, minimum tax, VAT. So just to clarify for us, what does this and this and this mean?
Okay. Let me use an example to drive the point home.
Yes.
If I'm an influencer and I endorse company products, okay? Assume that is the only income. So one is a digital service, okay?
Yes.
If you earn 5 million and above, or you estimate that in the next 12 months you are going to earn more than 5 million, you need to register for VAT and start charging VAT. So that if you give the company the invoice to pay you, they pay you with VAT. Okay, that's the first one. And you also declare VAT. And remember, when you're offering your services, you're also procuring other services. For you to endorse, you might need some stationery, you need electricity, you need some bundles, and all these also come with VAT. So you'll need to net off the VAT you are charging from the VAT you are charged, then you pay the balance. But remember, it is a cost you are pushing to your customer, the company you're endorsing for the products. And then there's also turnover tax.
Yes.
Turnover tax was introduced from 25th of April 2020, where any person who is earning 50 million and below, or has a turnover of 50 million and below, needs to be within the turnover tax rules. So you will not be taxed like corporate bodies with 30%. Their tax is very favorable, 1% on turnover per month, and that's a final tax. Okay. So if you also do digital service, then you need to net off one from the other. Okay. If you're doing VAT, there are two separate tax. You can't mix them.
Okay.
Then we have withholding tax. Withholding tax is done on professional payments and others. And we have professional, agency, brokerage, management, consultancy, advertising by international bodies, non-residents. We have rent and many others, interest, dividends, and the like. So when you earn income like that, there's a withholding tax. This is withheld by whoever is paying you. It's like your customer withholds. Like for the endorsement, if the entity deems it as an agency fee, they'll pay you minus 5%. And if that happens, DST will not apply. Then as you file your annual return, you will do, if it's a company, because I know most of them now form companies, you'll do 30% of what you earned. Assume the tax comes to 20,000, then you deduct withholding tax that was deducted by the company, because that is also an advance tax. If you paid any other DST on somebody who did not withhold, you also deduct the same. Then the balance is what you pay to the commissioner. I don't know if that clarifies.
And then there's the minimum tax.
Oh, minimum tax, yes. Minimum tax will apply where you are not under turnover tax. Okay? And minimum tax, if you look at it, we're actually trying to implement what is in the Constitution, that everybody pays their fair share of tax. You know, we've come to realize that there are companies who artificially, sort of manipulate their margins to ensure that they pay very low tax or no tax. We also have had a number of companies that have never paid tax in Kenya. Actually, we came across an entity that has operated in Kenya for 30 years. They have never paid a shilling. So I think minimum tax came in at the right time. So everybody will pay at least a minimum. At least everybody will pay. That is what the law talks about. So if you are under the minimum tax, you compare what you ought to pay using the 30%, basically. You check 30% of your profits, how much is it? Compare with 1% of the turnover. The higher one is what you pay. But if you realize the minimum tax is the highest, or the higher one, then you also claim credit for DST, for installment tax, for withholding tax, for advance tax if you have commercial vehicles and the like. Yes.
Okay. Now, let me ask Rebecca, from the perspective of a content creator, is there any money that you're required to pay? Like, is there any tax apart from the DST that you're usually required to pay in any case your channel was to be monetized?
None, not any direct tax.
There's no 5%, nothing of that sort.
5% of?
I don't know.
The withholding tax.
Is there withholding tax?
You see, the company that has given you if she monetizes her page, Facebook cannot withhold because they are not here.
Yes.
Okay. Those who withhold must be present in Kenya. But if she endorses a product, of course, first of all, I think you need to get to the hours, and then YouTube starts paying you, and then some companies will also see your page and would like to be associated with you. So if they are paying you, they might deem that to be an agency, and therefore they'll withhold. Okay. So in that respect, you will not do DST. But again, just to clarify Rebecca's business, she'll need to take care of the income tax at the end of the year. She'll need to pay 30% or whichever applies. If it's individual, you look at 10% to 30. Okay? And then you calculate how much you are supposed to pay. But deduct whatever was paid in advance through withholding or DST. Then you pay the balance.
So no double taxation?
There's no double taxation in that because you're not paying DST twice. Are you?
Okay.
Miriam, it's
no,
not.
You're not.
Oh, okay, sure. Great. So there's a question here again. We were talking about the 2 billion. You're targeting 3 points. 3 points what again?
3.4.
3.4. And we're losing 2 billion
daily.
So someone asked that kulipa si shida. The problem is, what are you going to do with that money? Where is it going to go?
You know, the government has a lot of projects and plans, both recurring expenditure and also development. You know, those who are living around Mombasa Road, you can attest to what is being done along that road. Of course, with the heavy traffic. So the government needs money to fund such kind of projects. The issue about losing tax, I think there are also relevant agencies that take care of that. You know, you cannot do everything. There's the government has a very elaborate system where each department is specialized to do something. But again, it is also incumbent upon all of us as citizens so that our voices are heard in terms of how our money is used. It is not just lamenting, across the fence that we are losing 2 billion while we are sitting and we are not acting. So we need to take our roles according to the constitution, participate in budget making, participate in law making, file petitions with relevant bodies, bring us people whom you are evading tax, because that is also a very serious crimes. They might be part of the 2 billion. Yeah. So those who are evading, please bring them forward, and that is part of our duties of whistleblowing. And then now we move our country forward.
Okay.
Sure.
So for someone who feels like you're coming at influencers, content creators, you're introducing DST because you want to get money so that you can be able to offset our China loans. Is that the case?
Loan repayment or debt repayment is part of the expenditure. When you hear the budget being read in April, and of course, April, you'll realize the government sets out what are expenditures for each ministry, for each function, and debt repayment is one of them. Of course, we might also be incurring debt because we need to finance certain capital projects. And incurring debt is not a unique issue. Ours is a drop in the ocean compared to the big countries, Japan, US. Actually, you hear of their debt, it's mind-boggling. But we still need the debt. But even then, we need to plan to repay whatever has fallen due. Yes, so we'll be using the money to do all that. Whether repayment or the others, because once the money is in the consolidated fund, it's not marked to a certain project, but it's still within the government budget.
Okay. So again, a question from someone who's following up on the conversation. If one is a freelancer and works via different platforms or websites, for example, Upwork, how will DST be applicable when the writers get paid via PayPal and all those other payments?
Yes, the good thing with the digital service tax is a purely self-assessment, which is in line with the KRA's trust and facilitation. I actually trust Rebecca that she's paying her fair share of tax.
Yes.
And that's why you see we are sitting very close, no problem, observing social distance. We expect those who are doing online research and online writing, whether it's Upwork, whether it's Wotuwetu, there's another one, I think there's a local one. Yes. Or Ajira Digital, but of course Ajira Digital income is exempt to a certain extent. Yes, so if an income is exempt, even if it's digital, again, there's no DST. I think that needs to come out clear. But for you who is earning through Upwork, it is you to declare. Because I know we'll have information, because PayPal might be one of our customers, and they decide to tell us, give us information that we paid so much to so and so. And then now the penalties are not usually very easy, and the interest. So you'd rather pay earlier than wait to be caught by the law.
So for my friends who are doing online article, academic writing and all that, they should do the self-declaration.
They should.
Pay the 1.5% only.
1.5%.
Not too much.
Yes, if you earn 20,000, you pay 300. Yes. Okay.
Sawa. So it's a good thing that you talked about remittance. So just, I mean, not remittance, but wow, where is that? I've lost a question here from someone again on the same. But anyway, we away from this DST conversation, I can digress for a minute. We have Kenyans who feel that taxes are killing most Kenyan companies and also driving away potential investors, while other nations such as Rwanda, Ethiopia, Tanzania are reducing their taxes so that they can be able to attract investors. What do you say about this?
Sometimes there are writings without good foundation. If you look at international journals, people have done a lot of research on what motivates people to pay tax. We call it tax and motivation. Taxes rank number 11. Investment, sorry. There's the motivation to pay tax, and there's also investment. For example, if a company wants to invest in Kenya, taxes to them ranks number 11. It's not the main factor. They invest here due to other economic factors other than taxes. So I think that is demystified that way. But that said, I don't think countries are reducing their tax rates. You know, we are within the EAC and there's the protocol. So we generally do things in a more similar way. I know Tanzania has started the discussion on DST. So it's also going to be introduced. Uganda started theirs. Actually, they started their discussions last year. And I think by June they might be implementing DST, and the discussion is all over the world because it is a global discussion. Again, reduction of taxes should be looked at in terms of are we reducing to enable others to spend so that we collect more? Because of course I am alive to the adage that a country cannot tax itself to prosperity. Okay, but we need to balance the government receiving the money and again enough being left in the pockets of people for purposes of savings and consumption, because that is how you balance the economy. Yes. So the issue of reduction or not, I think it should be backed up by facts. We see what are they reducing. But again, if you look at the global rates, I think Kenya is one of the lowest tax regions. Lowest tax regions, countries.
Rebecca, do you agree?
I don't agree. I can ask him a question if that's okay.
Sure.
On the timing of DST, why now? I mean, seeing that there's a global pandemic, people are losing jobs, people have started doing things online. It's like now.
Was a tough year.
Yeah. Why now?
You know, the discussion did start in 2020. In fact, the first introduction of taxation of the digital economy was introduced in 2019. In fact, the Finance Act 2019 that became effective on the 7th of November 2019 introduced taxation of the digital economy, and it provided that if you're earning income through provision of an online marketplace, then you're liable to be taxed in Kenya. So it was just about time for specific law to be introduced to tax the same. That said, you know that the pandemic has moved businesses from brick and mortar to the digital space. So the government is not collecting what they used to collect on the brick and mortar. So what do? They also have to follow. You follow the money, okay? So that is why there's a shift in a bit of a shift in the policy, also to ensure that the tax base is expanded. That sector of the economy that has not been taxed is also brought in terms of course, fairness to everyone. Why would I be walking into the office, working every day? I pay tax, and you sit at home, monetize your digital space or endorse products, and then you say, no, don't tax me for now. I think it's only fair that all of us pay some tax. And you see how fair it is, 1.5%.
I've seen people making good money up on Instagram. Someone is charging 3,000, 5,000 per post.
Very true. And now, you'll actually bear with me, it's very right. Most of the advertising houses are not having the same business because advertising has now moved from where you do gigs and record people and do a lot of other adjustments to somebody doing a gig in his house. And that's it. Yes, so it's only fair that we also move towards the same direction.
Okay, because we do not have any more time left, I'll just give each one of you a minute to maybe say your closing remarks, starting with you, Miriam.
Okay. Thank you for having us. I think any citizen just wants their taxes and the money they pay to be used well to improve the quality of life and to expand the tax base so that we're all bearing the burden. And if all relevant agencies can guarantee Kenyans quality life through, which is not what we have at the moment, and it's not what we see with given the burdens we bear. So I think for me the bottom line is let's do better. Kiari do better, Treasury do better, the government do better. Let's do better.
Thank you.
Okay. Rebecca?
Thank you so much, Rachel, for having us. Just to echo what Miriam has said, we want to see how our taxes will be utilized to better our lives, and I can't wait to see how this DST will be administered. I'm so excited to see how the implementation will be done, because it will not be easy.
Okay.
Thank you for this opportunity. This is one of our core mandates, which is actually now was put in the KRA Act of 1995, that we do a lot of training and sensitization to our taxpayers. You know, they say that an educated and an informed taxpayer is a compliant taxpayer because they know their rights and obligations. As you see, as KRA, we are just you and, you know, like any other person. We are approachable, and KRA has changed the face. You can come to our office, tell me in confidence, you know, I didn't pay tax for 2014, 15, 16, what do I do? I will tell you there's a voluntary tax disclosure. Pay the principal, you get all the penalties and interest waived. Okay, yes. And if you feel the tax is quite high, you are not able to pay at a go, we give you a payment plan. So please talk to KRA. And KRA has also gone digital. We have a Twitter handle at KRA Care. We have a Facebook page. You know, we have our email all over. Please write to us. Let's converse so that we move Kenya forward. Because this is a collaborative effort. If all the taxpayers decided we will not give you information, you know, it will now be another thing altogether. Economic sabotage. And my very good advocates here can know that better than myself. So I think we just need to pay our fair share and work together with KRA. Otherwise, thank you so much.
Awesome. Thank you so much for coming. I appreciate your presence. I appreciate you honoring my invite here. And I think I've learned so much. I've been able to understand a lot. I don't know if you ladies now feel the same. Coming from the perspective of content creators. Okay. That is Nixon Omondi, team lead digital economy at KRA, Miriam Mugo, the advocate of the High Court, and also a content creator, as well as Rebecca Ndungu, advocate of the High Court and a content creator. You can find them on Legal Banter 24, available on YouTube. Thank you so much for watching, and you have yourselves a lovely night. My name is Rachel Anyango.
We value your feedback and welcome your complaints about our programming and operations. Feel free to get in touch with us through 0700 893 542 or send us an email to views@look-up.tv. We can't wait to hear from you. You're watching Look Up TV.